video is a continuation of preparation of the statement of cash flows using the indirect method. In a prior video, I worked through the operating activities for Dexter Company using the indirect method. In that video, net cash provided by operating activities was $5,600. We're going to need that to complete the statement today. Before we go further, let me remind you there are three sections to every statement of cash flows minimally. We have the operating activities, we have investing activities, financing activities. The operating activities are primarily concerned with beginning with your net income from the income statement, make adjustments to that net income by adding back any non-cash expenses, removing loss or gain on the sale of land or equipment, and then you analyze each of your current assets and then current liabilities and make adjustments to the net income based on some particular rules. So please go out and review that video if you haven't seen that on the operating section. Now we're ready to examine the investing section. The investing section is primarily focused on your property, plant, and equipment or long-term investments. Financing activities are going to be related to long-term notes or liabilities, and then activities in the stockholder section. Let's examine the sheets that we have. We have the comparative balance sheets here. Again, we've already worked through the current assets and the current liabilities, so we're finished with those. What we're focused on now will be the property, plant, and equipment and long-term liabilities, and then the stockholder equity section when we get to the financing section. We have a few additional notes here because we have to analyze these accounts to determine what caused the changes in them. So first we're told that land was acquired during the year for $70,000. And also an unimproved piece of land was sold during the year for $27,500. The original cost to Dexter was $30,000. So let's go up to that section. Property, plant, and equipment is where we will be going. We want to analyze this account. So let's go to the land. Beginning balance of $80,000. And we purchased an additional piece of land for $70,000, so that's $150,000. And then we were told that they sold a piece of land that had originally cost $30,000. They only got $27,500 for it, so that's actually the loss we see up here on the income statement, the loss on the sale of the land. We are interested in the cash movement, and to calculate the cash movement here, we need to analyze the accounts as well. So we would have removed this land from the total, and that got us to $120,000. So we have analyzed the land account, and we know what happened. Now let's record how that impacted the cash. So here we have a purchase of land, and this was for cash, $70,000. So when they purchased it with cash, that is a subtraction. They spent or dispersed the cash. Sale of land, so when they sold the land, they received cash. So this is a positive amount. We had to remove the land at $30,000 from our books, but only $27,500 was received. So this is the amount we are interested in right now. The net cash provided by the investing activities, we're going to net those two numbers. A negative $70,000 plus $27,500 gives us a negative $42,500. That means that they spent more than they brought in for the investing section. So we have the positive net cash provided by operating activities, and a lot of times if it is a negative number, you notice we're using the word used, net cash used by investing activities. So let's go look at the other details we have here. Let's look at number 3. A specialized piece of equipment was acquired in exchange for capital stock. The value of that stock, $60,000. So here, the company acquired some additional equipment, but no cash moved. So for that, we're going to put that in what's called a supplemental note at the end of the statement because cash didn't move, but it is a significant item. And whomever is examining all of these financial statements and trying to reconcile the numbers back together, they will see that there is some equipment there. They will see that capital stock increased. So we need to put a note, include a note along with the statement to show what this is. I'm going to go ahead and show you where this would be. At the end of the statement, you see it here, supplemental schedule of non-cash investing activities, and you just write a sentence, issued common stock to acquire specialized equipment right there. So just put a note so that you're disclosing full information. So let's go back to the equipment section and make sure we can reconcile these numbers. So we have a prior balance of $130,000. Now we were told that an additional $60,000 piece of equipment was purchased. So if we add those together, do we get $190,000? We do. No cash movement occurred here, so this is not going to affect the area we just worked in investing. If cash had been expended to purchase this equipment, it would have been reflected here in the investing section or investing activities. Now we're ready to go to the financing activities. So let's go down. Remember, this is going to be reflecting your long-term liabilities and your equity section. So we've already finished with liabilities. Here, let's go to the long-term notes. The balance was $10,000. The balance now is $0. And if you look at item 4, it tells you what happened there. The payment was made on a long-term note payable. And if you look at number 4, you'll see that we're given information to tell us what happened. A payment was made on the long-term note payable. So when cash is expended, that's a subtraction. Up to the financing section, payment on a long-term note. This is a disbursement, so it's going to be recorded with parentheses. This is money that was spent. Next, we have, in addition to the capital stock that was issued in number 3, stock was sold for $50,000. Let's go up and just analyze the stock account then. This is going to be, we're finished with long-term liabilities. Now we're at common stock. So the balance was $90,000 and the balance now is $200,000. So let's start. There's our $90,000 to begin with. And remember, back up at number 3 here, we were told that $60,000 was given for the new equipment that was purchased. So that would be $150,000. Now this item, number 5, tells us that additionally $50,000 in stock was sold. So that reconciles our current balance in capital stock to $200,000. So we need to recognize that over in the financing section. When the stock was issued or sold here, $50,000 was received. That's a positive number. So we had subtract $10,000 on the long-term note. Now we've got a positive number on the $50,000 for the sale of capital stock. And then, let me just highlight that to show we're finished with it. And then lastly, number 6, dividends of $600 were paid. Dividends are subtracted from the retained earnings account. So let's analyze that retained earnings account to see if we have any other questions or problems. Beginning balance was $74,300. Now remember, for retained earnings account, items that impact that other than dividends are net income. So if you go up to your income statement, remember the net income was $5,200. To reconcile our retained earnings account, we'll need to add that $5,200. And then in the last item, number 6 here, we were told that dividends of $600 were paid. So let's subtract now $600 and see if that reconciles our end balance. Yes, it does. So what we will do now that we know the dividends were paid out, that is a subtraction. Now we need to net these 3 items. So we have the negative for disbursement of long-term note, $10,000, positive $50,000 from the issuance of stock, and then a negative or expenditure for the cash dividends of $600 as well. Net those 3 items and you get $39,400. This is the net cash provided by financing activities. Now we're ready to net all 3 numbers to get our net increase or decrease in cash for the time period, the year ended December 31st, 2025. From operating activities, we had a positive $5,600 net cash provided by operating activities. Cash flows from investing, we have a negative $42,500. Cash flows from financing activities, we have a positive $39,400. So our net increase in cash will be netting these 3 items together, we get a positive $2,500. Let's go back over to the comparative balance sheets and look at the cash account. So the current balance, 2025, the current balance in cash is $12,000. The balance at the end of 2024, which became our beginning balance on January 1st of this year, $9,500. So that means there was a net increase in cash, a positive increase in cash of $2,500. And that's exactly what we found to be true when we prepared our statement using this indirect method. And by the way, even when you prepare the statement using the direct method, you will get the same answer. Make sure you watch for that video, how to prepare the operating section, how to calculate and prepare the operating activities or section of the statement of cash flows using the direct method. And then don't forget to finish off your statement, good clean form. Add the cash balance at the end of 2024 to the change in cash, which was the positive 2,500, and you get a total of 12,000, and that's what the cash balance is now 2025 at the end of the year. Just add those together. Notice that we didn't get crazy with dollar signs. We started each area with a dollar sign and we end with a dollar sign. They are not cluttered all throughout the statement. Also, don't forget to add the supplemental schedule for the investing and financing activities. This is where the specialized equipment was acquired and capital stock or common stock was given in exchange.